Yeah, what is it they wanted? Oh yeah, they wanted the DAX as well. Done. I think that does it. Is that right? Let's have a look. Done. Hello everyone, how are you all doing? Are you winning? Are you making money? New day. Oh yeah, new day, new week, new month, new possibilities. How about you say this month, make a pact with yourself. Make a pact with yourself
Hello.
this month. Hello. Yum. Yum. That's a good name. Is it Yum or is it Yum?
Thank you so much.
What should I call you? Yum or Yum?
You.
Yum. Excellent.
Yeah.
Where you from?
I'm from Malaysia.
Excellent. Whereabouts?
Kuala Lumpur.
Oh, nice. Very nice. Malaysia. I like Asia. I think Asia's a cool place. Good. As I was saying, how about you all make a pact with yourselves to not lose money this month, to actually make some money this month. Whether that's making it from trading or just whatever, getting a job, whatever, whatever. Just say February. I'm going to make some money this month. I'm going to hustle.
I want to pass FTMO this month.
Oh dear. Yeah. We watched the video.
Yeah. I took the trial last month and I failed, so I'm planning to be more
Have you
cautious with it.
did you note what I was saying about the checklist? Have you got a trade plan? Have you got a
Yeah,
journal?
I over leveraged. Like when I saw yours, I was like, definitely. I took a big gold trade. It was really going nicely, and then I took a big risk on gold, and I took.
Yeah, that'll happen, Frank. If you leverage 10%, take 10% risk to try and make 10%. It happens.
Yeah, also when I backtest, I really do it like properly and I manage my risks. And when I trade live, I feel like I do get excited. I see money, I close my trades, and I think this is one of the things I need to work on.
Yeah, definitely. It's just the way it's trading. It's what happens. You see some profit and you're very excited about it, and you're like, oh, oh, what should I do? Should I take? It's having a belief in your plan, and then having the conviction to follow through with what you said you were going to do. And that's why you are your own worst enemy. That's what makes it very difficult. It's not the trade. It's not anything else, is it? It's just you. You get in the way. Don't realize how much humans can be annoying in terms of causing disruption to proceedings. If people just got out of the way, minded their own business, and let the world get on with it, because the world just keeps turning. So, if you take that kind of a view and approach to your trading, that might help. Because it's all about your thinking and how you think about things, and your yeah, it's just the way it is. You have to be a master of yourself, not a slave to your own brain. You have to be able to control your brain. You have to be able to maybe do things like meditation. That helps allow you to switch off. So I'm going to switch off my brain now for about 10-20 minutes and put it on standby mode like you do with the television when you turn it off. That's what meditation is. And then you wake up and you feel refreshed and energized and ready to go. Yeah, it's like charging up your phone. Allow yourself to charge. It's yeah.
I'm not the most patient person, so I get really frustrated fast and to start fast.
Well, I say to anyone to just take time out, maybe 10-20 minutes, but in your case, take an hour. If stuff isn't working for you or you struggle with something, give it more time. So that's when someone says, "Oh, I don't have time to rest. I don't have time to meditate. I don't have time for this." It's like, yeah, it's 20 minutes. It's like, well, I don't have time. Well, okay, we'll take an hour then. That's what they say, isn't it? The idea is to really, really force it upon you. So whatever you're struggling with, give it time. Be generous with your time. Allocate it. Prioritize. It's the only way, isn't it? It's the only way. But be patient with yourself as well. Be kind. Be patient with yourself. Don't be too hard on yourself. I think I see people too hard. And I said in that video yesterday, just what's the rush? Have you somewhere else to be? Everyone rushes around, don't they? And you can't do that with trading. You can't rush the process. I know you want to be rich by yesterday, but it's not going to happen, and you're going to be broke by tomorrow. It's just the way it is. It's not designed for you to come in and do what you think you can do and just do what you want. It's not. You have to give it respect. There's a lot of people that try and trade and they haven't got the right ideas, the right characteristics. They're not very respectful as people. This whole self-entitlement as well can sometimes be quite funny. That's not going to work in this business as well. You have to be very humble and you have to be very forgiving and very much like, okay, this is going to be hard and I'm going to struggle, and accept that and embrace it, and then you can move forwards. If you're in denial, if you're like, okay, no, I can do this, and you're very like, no worries. I think that might cause a bit of a problem. Do you guys want to scan the markets? Let's. Somebody asked me as well about. Let's have a look. What did this person ask? He asked about. Did I do it? Yes. Yeah, I was going to talk about this stop loss table. Somebody asked about this. I was going to talk about this yesterday during the FTMO video. And then it's just a lot of content. I want to keep the videos to like 10-20 minutes because they just drag on. People can just talk and talk and talk. And I know for one, I can talk and talk and talk and talk and keep talking, and it's just too much. So this is a very useful tool. If you follow the links, or if you want the link for this, it's in my, I think it's in my box, like a Dropbox, my cloud, so I can give you access to it. And all it is it just helps you to visualize your month. So if you start with 100k with the FTMO challenge, and you start with 100k, risking 0.5%, so $500, and your number of trades is assuming that you have about 20 days to pass it. Generally, you have about 20 plus days to pass it, so plenty of time. You get a couple of good trades where you're able to make 2% risk to reward, or 3 or 4%, then that's very good. You only need a couple of them. And what I was saying as a tip, as the way I've seen it, is people try and rush it. I think take your time with it because it's going to teach you to trade properly, and you want to get into a routine so you can trade. And that goes with all your trading. Just trade the same way every day, every week, every month. Don't suddenly change the way you trade because you're doing a challenge. If you've passed this challenge in 3 days, and it's because you've gone in with high lot sizes and you've managed to do it that way, that's not going to serve you well at all. That's not going to work for you long term. There's too many people passing these challenges in like 3 days, 4 days, and then they don't get past the verification, or they don't get to the point where they're funded, or they get to the point they're funded and then they don't know what to do, and they don't make any money, and they give back the money, and it's just a mess. And because there's no consistency from stage 1 to 2 to 3, so you have to kind of break it down. So that's what I did in a video to give you some structure, because obviously the difference is that you have time constraints. The risk goes without saying, but the time is the big one. So I can give you a link to this as well. It'll help you. So look, if you had 20 trades in a month and you had 20 winning days, no losses, and you risked 0.5%, you'd make 10,000. You'd make 10%. If you won a few of those where you had 1.5% risk to reward, so you made 1.5% on them as opposed to just one, you can see you'd make enough money. Let's start down here. Let's say let's say your hit rate should ideally be more than 50%. Say your hit rate's 60%. So in a month, you've had 12 winners, 8 losers, assuming that you've taken 1 a day. So this is a good guide. It's a good guide. You can use it and you can keep punching in the numbers and you can see where you're at. So you can say, right, I've taken 30 trades, 40 trades, and you can tweak it and you can see how you go. It's all right. It's useful. But what it does aim to do is try and help you with the risk, because it helps you allocate the amount of risk that you need every day for a week and over 4 weeks. It tells you exactly how much you're allocating. So if today's your first day, you're going to risk 500. That's your maximum risk for the day. And if you're going to risk 1,000, so you're risking 1%, then note that perhaps you can't trade on a Tuesday. Or if you're going to do Monday, Tuesday, Wednesday, then note that maybe you can't do Thursday and Friday. If you're really disciplined. So there are ways to do things. There are ways to trade that require a bit more effort, and you kind of think to yourself, oh, I can't be bothered to do that. I'm like, well, why not? What else have you got better to do? It's like, seriously, what else have you got to do that's more interesting than this? So try these different approaches. Try and be really super disciplined, because like I was saying in a video yesterday, consider yourself a risk manager. You're not a trader. None of you are traders. Maybe when you've got a consistent track record and you're making a lot of money and etc., I can say to you, yeah, good, you're a trader, cool. Otherwise, I'd just say, look, you're a risk manager. Understand what that job is all about, and try and understand the job role, understand the job description, and learn how to manage risk. That's your job. Become a risk manager. I was saying to people, if you become a funded trader because you pass all these challenges and you've got this money and they give you 100 grand, for example, what are you going to do with it? What's your approach? You're going to go to the Lambo dealer down the road and put a deposit on the car. People want to do that. It's fair enough. There's nothing wrong with wanting.
I would do that for my first payment. I deserve, a gift.
There is that, isn't there? Self-entitlement. It's like, yeah, and we live in this we live in a society of instant gratification. I want it now. It reminds me of the movie Charlie and the Chocolate Factory, and the girl, she wants it now, and the dad gives her everything. I want it now. I want one of them as a pet. I want everything. It's like, and that's a movie, and we laugh about it, but that's how society's become, because we have instant access to everything. So unfortunately, you have to be aware of that, because it shapes us, doesn't it? We are greatly influenced by the world, by society, social media. It is what it is. As long as you know that, which I think most of you do, but what do you do to counter that? Do you have any sort of countermeasures? Because you are being influenced and you don't even realise sometimes. I think for me, that keeps me grounded is having family and understanding that whatever memories I make with them are important to me more so than anything else. And But each to their own. I mean, if you haven't got much money, then of course priority is going to be to make money so that you're comfortable. And so yeah, everyone's different. Your outlook, your landscape, what you're thinking of doing and being, and how. It's, yeah, you're going to be influenced. You
can
can
I share my point of view?
go on, Luca. Share your point of view.
I mean, let's say that let's put a example, okay? For instance, me, I come from Brazil, I don't have much
Brazil.
things, material things, and I won't be buying like every car is in front of me when I get funded. I
You
don't
have
have anything,
football.
but a lot of people say, "Oh, I didn't have nothing on when I were younger, and now I want to buy everything.
Yeah, it's understandable, isn't it?
I have this kind of mindset.
Luca, this is what you're saying now. Once you get your first payment, you'll be spending it. You'll be like playing with all the money
Yeah.
on
It could
Discord.
be, it could be, yeah, it could be.
Listen, I think worry about that when you get there. Worry about it when you get there. I think if anybody achieves any greatness in trading, starts making money, starts seeing some profits, I think you will have done it the right way. I think you will have learnt some valuable lessons enough to enable you to keep that money and appreciate what you've got. I don't think anyone who makes money from trading ever turns into a monster. I see it. I see it a lot where people are, they've become traders, and the traders I know that make a lot of money, they're very humble. They're not generally big-headed people because they've worked for it and they understand what money is, and also they understand that time is the most important commodity in the world. It's not money, it's time. And you understand that, you understand everything. The world doesn't revolve around you making, thousands of dollars or pounds every day. It's not. Who cares? Nobody cares, but you care obviously. But so it depends what you put in terms of what importance you put on these things. Just you gotta think like that. You've just got to keep thinking. Be open to the way you think. Don't just be so close-minded that I've got to chase the dollar. What are you, a gangster? You've been watching too many of these YouTube videos. Too many pop videos where everyone's a gangster and they're all talking about, yeah, gonna, with their guns and their drugs and their women, and it's all like that. And it's just that, that's entertainment. That's supposed to be fun. That's supposed to be something. But yeah, some people take that literally too far. But anyway, there you go. Hopefully, you guys can achieve some money. Understand how much you want to make. Write it down. Note it down. Year 1, year 2, year 3. Year 1, I'd like to be on. I'd like to make $100 a day. That'd be great. That's about £2 grand a month, give or take. I'd be happy with that. It's a 30 grand salary in England. If you're making £2,000 a month, that's about £30,000 salary. It's not a lot, but if it allows you to sit at home, scratch your balls in your boxer shorts and your t-shirt, and your only decisions in life are: should I brush my teeth now? Should I have a shave now? Should I go and have some food now? Or should I just go back to bed or go and play on my video games and my Call of Duty? I think this is the life that a lot of people seek, isn't it? They want to be able to procrastinate. They want to be able to press some buttons on a computer and make instant money. And fair enough. Each to their own. So. But be clear on that. Be clear on what you want to achieve, and you'll do it. If you don't have a trade plan, you don't have a 5-year plan, then what are you doing? What do you expect to do? If you're only living for today, right now, then how are you supposed to plan for the future if you're not thinking about the future? It's all very well saying, I want to have a Lamborghini, I want to have a nice house, or I want to have this, I want to have that. But okay, so you've got these ideas, but you want to make these dreams a reality, and you can, because we see people doing it all the time. And what did they do that was different to you? Not much. They're still human. They still have the same feelings. They still do the same things. They still have the same issues, worries, and no one's different. No one's superhuman. I think sometimes you think, oh, this person's got loads of money, so he's like a god. And it's like, well, no, he's not. He's the same as you. he'll still die. Doesn't matter who you are. And when you die, what can you take with you? So yeah, I'm going to die now.
Still lives in the same house
Just yeah.
since he was 20.
Yeah, of course. So he's got the same house because I think for him it's about sentimental value. It's about always never forgetting where he came from, how he started. But I mean, at the end of the day, he's gone through life and he's done what he had to do, and he's got a lot of money and he's spent it as well, and he's bought himself other houses, boats, cars, whatever. He's got other things as well. It's not like he just has one property. You know, he'll have a portfolio of property where he rents them out, or has commercial property where he earns money off that. So it's all good. But yeah, again, take it all with a pinch of salt. If you have a lot of money, you'll invest it. You'll diversify. You'll buy properties. You might even set up a rental property business. When you've got some money, you can do a lot of things, and so you'll start looking at other ways to generate an income. Passive income is what you want, isn't it? So you can literally sleep and make money in your sleep, and that's great. And then it becomes something that you don't have to be obsessed with money and worry about, and then you can actually get on living a life away from all of this, and that's quite nice. So be clear on what you want, and then go for it, and hopefully we can help you with that to a point. Don't ask me about fibs. Should we have a look at GJ? Yeah, everyone wants to look at GJ. Let's have a look at GJ. GJ.
I backtested your strategy today, Alex. 764.
What happened?
It was good. Yeah. I mean, sometimes and some pairs are a little bit crazy and don't respect fib levels. But Audi USD, GBP, JPY, EuroCAD usually respects more.
Okay, interesting. Right, okay, we're loading up now. So you can see it's gone to 144. So yeah, it's still very, very bullish. Oh, what I want to show you with the pound yen is, bear with me 1 second. Let's just have a look at this. Let's just make sure. Oh, annotate. Let's do this. So annotate. How is it that some people are able to do that? Somebody logged in with 2 dots, 2 dashes. Okay, you've logged in with 2 dashes. Could you not have at least just put a name or a nickname or something? Just looks like a pair of eyes staring.
Like a full sentence.
Yeah, dot dot. That's no, it's dash dash, isn't it? So you need dot 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 dash 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 dot 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 SOS help. You're yeah. You're, oh, he's gone. He's dropped off the radar. Yeah, maybe he can log in properly. It's annoying when people do that. So let's have a look at where is it? Here it is. Oh yeah, before we'll go to the pound yen, and then we'll have a look at euro dollar, because euro dollar's broken. I did analysis on it last week. So this is my pound yen. This is what it looks like in terms of extending above the previous structure, previous high. Also, this is a weekly chart, and we have a trend line coming down, and it just pushed on through there. Really, it didn't really stop. Quite strong, quite powerful. For me, I would like to see price get up to 145.34. So 145.30s, we know that it likes the 30 number. So if it could get up to about 145.30, that would make for a really strong short, because we have divergence if we look at it on a daily time frame, for example. And so we have broken up and we've broken out above that 142.80 area. So let's zoom in and show you what's happening there. So we had resistance, we had a trend line resistance, it's broken through. We had the previous structure, it's broken through. Where's it off to? Well, what we can do here is get some fibs, as always. Take that last high on this higher time frame, the weekly, so you can really see that it's really pronounced. It's a nice spike up, it's really clear cut. That's your high. And then where's your low? Well, that's clear cut as well. The last swing low, which was in March when we had the COVID price action. So this is all COVID related news, impulsive. And then we've been in a corrective phase for almost a year. So it ties in quite nicely that almost a year down the line, we had the impulsive move, which is fundamentally relating to the COVID news, the COVID outbreak, because people have been asking me a lot about fundamentals and how we read fundamental news. And I said, you're misunderstanding. It's not a case of you getting some figures and stats and trying to work out what's forecast and what's actual in terms of figures. That's not what we refer to when we talk about fundamentals. What we're talking about here are things like this that's relevant, not the stuff that happens every month like non-farm payroll. That's not something that we care about as much. It's stuff like this, COVID news. This is what caused the market to move like it did. So we had this massive sell-off. So 1, 2, 3, 4 weeks of major price action, selling bearish to the downside. Yeah, and then it bounced and started its movement up. So 4 weeks to sell off, and it's taken almost a year to give it all back. That's what I'm talking about when we talk about fundamentals. It's a prime example of what we mean. Fundamental news. It's fundamental. It's affecting everything globally, fundamentally speaking. Has nothing to do with a fib level or a trend line or anything else, is it? It's just something that happened in the world that's a catastrophe, really, and now we're going to see the fallout. So, we see this, and it just seems like it's going to keep going up now. All the pound pairs seem quite strong. Also, fundamentally, Brexit has been agreed to a certain degree. They're trying to do some deals with the Pacific countries. There's an agreement over there, which is with Japan, Australia, New Zealand, countries like that. So we're going to look at the pound, and we're going to watch as someone putting their hand up. Big D, you can speak if you guys want to speak. You can speak. Dash Dash is back. Hello, Dash Dash. You went and you came back. If you right click on your name where you've put your dash dash, you can actually put some initials or a name or something. We try and operate on a first name basis as best as. But yeah, if we have here, so here we have this pullback down, and this was the COVID news, so we talk about the fundamentals. Now Brexit has been sorted, pound pairs are generally bullish, and so we always look for the upbeat movements, bias when it's a bullish day. So even if it goes down, we might take some intraday moves to the downside, shorting, but on the whole, I'm not looking at a 15-minute time frame to take shorts on pound yen. That's just not how you want to be trading pound pairs. You're looking for 140, $1.40, back to $1.40 for pound dollar. Pound yen is bullish as well, very strong. So yeah, if you're looking for a breakout, well, we've had the breakout. We had the breakout at 76.4. It tested it twice over 2 weeks, and the third week, which was last week, it broke, and it broke previous high, broke the trend line. It's a strong push to the upside. After sitting and thinking about it, third week, third attempt, we look at 3 times. We look for 2 touches on any support area. So whether that's a trend line or fib level, if something gets tested twice, then that draws our attention to it, and we say, okay, there's a trend line here, and then we look for the third. Oh, come on, guys! Really? Nice. That's very mature. Ah, dear. Anyway.
everyone, and that's your safe. My opinion.
Yeah, of course, but shouldn't have to do that really. Just trying to show you guys some stuff, and figured maybe you might be able to. This is what we were talking about yesterday in regards to respect or lack of respect. People don't know the meaning of it, and it just is what it is. But that's okay. They just continue to be dicks and go through their lives being a dick, looking like one, and capable of not even drawing a good one. I mean, Jesus, that's just.
It's probably someone that just got here today.
Yeah, I know who it is. I haven't kicked them out. I just thought maybe they might just endure this crap that they've put on the screen. We just work around it. I don't care. So there you go. A bit of entertainment for a Monday. So yeah, look basically for bullish price action, and we're looking for 145.30 area on this pound yen. So this is a weekly chart. So if we can continue to go up, we've tested support multiple times. We tested this resistance multiple times, and then it broke it. So do you know what? I'd like to see a bit of a pullback because it's a nice extended candle. If we do get a pullback down to 142.80 area, because you know pound yen likes the 80, I'll start looking for some buys at 142.80 to continue the journey up. You've seen the way that the pound pairs have been moving. They have been making these bullish gains, but they've also been dropping quite hard each time. They'll drop back and then they'll get bought back up. So, you know, the fact it has been doing that, and we talk about history repeating itself, if it drops, which you can anticipate it doing, sit in your hands, be patient, wait. If it drops, then buy it back up. You know, so basically then you're buying it at a low price, buy low, sell high. That's what you want, right? So yeah, that's my take on pound. That's just my take on a lot of these currency pairs, especially when they're in a nice bullish trend. So definitely not interested in shorting. If there are some intraday short moves to be had, so like if something happened today with a nice little sell-off on pound pairs, then I might be inclined to get on it and make a little bit. But overall, I'm always mindful of the overall trend, and this is why we do a top-down analysis. So start on the higher time frames, looking at the bigger range. So yeah, let's have a look at this as well. So get that off there. You forgot to put the pubes on the balls. But I like the colour coordination. Blue, very good, very thoughtful. Oh, is he gone, is he? Oh, well, there you go. Collins, what do you want to do with it? What are you thinking you want to do with this pound yen? Do you want to go long or short? What are you thinking? Oh, you're in a short on a 30-minute. Okay. So let's have a look at 30-minute. So yeah, I've just done my analysis. You get where I'm coming from, and it all makes sense. I think sometimes people are very tough, and you become very much stuck on your decision, which is fine. You know, you should think like that. If you've put a trade on, make sure you've got your stop loss, correct risk. Happy days, away you go. And then repeat that process over and over and over and over and over, and just keep doing it. And that's what trading is. If it's not working out and you don't like the way it's moving, maybe cut your losses and get out the way, and then just see what it does next. Okay, so this is not. It's annoying when it does it. Let's get rid of this. Okay, let's clear that. There we go. So that should work. So we wanted to have a look at a 30-minute. So yeah, 30 minutes. You might get a little bit of a nudge down. Let's have a look at the 1 hour as well. So nudge down. Where are you in at? What price though? It depends. If you're really interested in wanting to buy it at 142.80 and you want to set a limit, a buy limit, you can do. I'm not that desperate to want to have to actually put a trade on that I have to set a buy limit. So I rarely do that. In fact, I can't remember the last time I did that. But people like to do that because, you know, they may have life commitments, work commitments, other things going on. So, yeah.
So, Alex, looking at this at the 1 hour,
Yeah,
on the 1 hour, the GJ,
yeah,
if you look at the last push up from when the markets opened yesterday,
yeah.
if you put a fib on that, it's coming down to the 76. Is that too short of a time frame to look at that possibly being a
Well,
point where we head back up to a higher high?
So let's. What do you mean the 76? Is that from the? So where's your 100%? Is 100% at the top?
100% at the top.
Yeah. See, so that's immediate.
Bottom is
Yeah. So that's wrong straight away for me. That's wrong because my 76 is never going to be something I'm going backwards
oh
from
no no
100%.
yeah no I'm sorry
It
the
might
100%
have
at the
been.
bottom I have it
Oh right. Okay.
like at the when the session started at the beginning of the week like yesterday.
Okay.
And that's sort of where there's a low there. That's sort of the low, the higher low from the previous push up. You had a higher high and higher low.
Yeah.
That started yesterday when the markets opened back up.
Yeah.
And then last night it got to a high and then it's dropped down. So running the fib from the higher low right at the beginning of yesterday, market opened
Yeah.
up to the high.
So what time frame would you have?
Push up
What time frame would you have that on?
on the hour.
Oh, on the hour. Okay.
On the hour.
See, for me, my hour's got 400 pip range on it. It's quite different to yours, isn't it? Because this is what I'm always
I
trying
just
to.
have it adjusted down towards.
Yeah, no, I mean it's there's nothing wrong with what you're looking at all. Stuff like that with a smaller range. What's your high and what's your low then? What range is it? What's the high and low?
So
What's the numbers, please? I can find where you are then.
The 100 is at 143.37.
143.37. Yes.
0 is at 144.
Yeah, it's that range. Yeah, so for me, look at that. What you're looking at there, which is fine. You know, that makes sense. That I'd put that on a 5-minute chart or a 15-minute chart. I wouldn't waste my hour time frame, which is my hour time frame you're seeing here. I'm watching 400 pip range. You're looking at this fraction, this movement here, which is great, but that's very intraday, and that's very much for like now, and that's for me. I would put it on a 5-minute chart or a 15-minute chart, if that makes sense. So I can see what you're talking about there. So I expected maybe you were looking at that. Yeah, so that's yeah, which is fine though. I mean, there's nothing wrong with that. So you've clocked it. It moved up, and now it's giving it back, and it's going to come back and retest this area. We've got on the 1 hour we have my EMA. I've got a 50 EMA that we're coming to tap, and that's at around 143.40. And so Collins is going short, and he's looking for a 20 pip move down with a 20 pip stop. So 1-to-1 risk to reward. It's just a standard trade. So yeah, I mean, good. Get on with it. If it's simple enough. I don't think. Yeah, I think I appreciate that. I'm always looking at something a bit more.
Yeah.
A bit more, I guess.
What I wasn't really looking for it to come down. If you put a fib on that last push up,
Yeah.
it's at 76.4.
Oh yeah, of course it is.
Turning back up to make another higher high.
Yeah, no, of course I'm with you. Let's have a look then, shall we? I get you. Yeah, no, it's good. It's good that you're looking at it and you're saying, okay, it might have some support there, and didn't mean to do that. Let's press the button again. Hope for the best. Get that out of the way. There we go. Get on here. Drop this down to a 30-minute or a 15-minute, and let's have a look at it on a 5-minute or 15-minute, because we're basically clocking that range. So let's have a look. Let's go to a smaller time frame. I might have to log in again actually. I'm on. Yep. Okay. So I go short out at 143.42. Okay. Chris is saying. Oops. Chris is saying go short there. Let's have a look at this. Let's get the old zoom up again. These Zoom sessions are far too short. Quite annoying, aren't they? Let's put some fibs on this while we're waiting. So take that last low, which was last night. It's pumped up and now it's coming back down. So we're tearing on through the 7.6. We've bounced off it, but it's, yeah, there we go. So that's making sense as well. Oh, here we go. So this is, yeah, let's get this on. Let's get this there, there, and there. Done. Apologies, got cut off. Didn't realise we did. Didn't realise we'd done 40 minutes already. But yeah, time flies when you're having fun. Dick pics and all today. We've had it all. Fantastic. Right. Oh, people are so funny, aren't they? Let's get rid of that. Yeah, so let's move this over here as well. Let's get this over there. There we go. So yeah, look at this, right? So you've got 764. Again, putting it on maybe like a 15-minute chart or 5-minute chart, looking at this little range. Sure, you expect a reaction. You've had a reaction, an initial reaction. Perfectly off that, pretty much. Can you see that? Yeah.
So I was just wondering if this was too short of a time frame to be looking at the 764.
I'm glad. Yeah, I know. I'm glad you said that. No, it's good. That's how you have to think. Exactly that. You don't have to overthink it beyond that. You've hit the nail on the head, Joe. That's right. So you think to yourself, don't give it an hour time frame, because then you're bigging up this move, which is, how big's this move? We're looking at, it's not a bad move. It's an intraday move. It's about 70, so if 70 odd pips from yesterday's open right through the Asian session, through to the London session. Now we're into the US session. So about 70 pips. Yeah, I mean, if this is all that we're going to get out of this Forex move today, so be it. Will it bounce from here? Yeah, it may well do that. It's trying to at the moment. It's hit once, bounced off, just tried to suck in some short sellers, and now it's reversing. Who knows? Will it go back up from here? Possibly. If I was shorting, or if you're shorting this, you have to ask yourself the question, if this is your range that you're accepting to work with, then you want to then say, okay, this is a 70 pip range. So if I'm shorting, where would be the best place? From here, really, from the 38.2, test. Then it started breaking down, and then you know, get in somewhere like here around the 80s, because you know that pound yen likes the 80 number, and then it starts breaking. You think, right, I'm going to take it, and then put my stop here, slightly above, etc. It's quite, you know, it's quite aggressive, and it's quite difficult because you're looking at such a small little range, and you're trying to extract money out of this little move, and it gets quite choppy. It's a lot of noise and a lot of up and down, and then when you finally do see it break here, which was the 50 area, so around 143.74. It breaks that area and it pushes down. So you say, okay, first target's going to be scalp it to 65 as a 61.8, and ideally you want that 764. So you would have sold it to the 76.4, 55 to 75, best part of maybe 20 pips at best. So yeah, would I have taken this trade? I might have done if I was shorting and on it and maybe in here, but if I stopped to break even, I would have taken some off, and I would have already said, okay, I'm only looking to scalp this move, so 10, 20 pip move, because that's all there is in it. Now then, of course, if it develops into a T2 move, so if it develops into a much bigger move, brilliant. But would I be shorting it here? No. Now? No, it's too late. You know, it's just hovering.
I wasn't looking at.
No, of course, but there are some people that are actually, there's somebody that's in short at the moment at 143.60. Somebody else on the live session on YouTube, they said they were looking to go short down to 143.42 area, and you know, some random target out at 143.428. I think sometimes that's overcomplicating it. I mean, it's personal preference, isn't it? For me, I like to use the round numbers, and I'll say, okay, I'll get in at say 143.80, short it down to 143.60, not 143.60.7 or 6. There's no need to keep adding extra digits. There's just no need. What for? An extra 5p? It's what for? So just keep it simple. If you're going to put a target, aim for 143.40. Why 42? And why 42.8? Ask yourself that. I'm not asking you. It's just rhetorical. It's just a hypothetical question. But just make you think. Sometimes you get so attached to stuff, so engrossed that you just overcomplicate the most basic stuff, like setting a T1. 143.428. So. I'm not picking. I'm just highlighting. Sometimes we always talk about keep it simple, and you probably think to yourself, yeah, I try and keep things simple as well. And then you don't realise that you're actually adding extra layers of complexity to stuff that should be relatively straightforward. But yeah, there you go. So yeah, we'll see. So getting down to 42 area would be to test previous structure, to come back down to this area. You can see that it's just thinking about it now. It's that key area. So you highlighted that, Joe. I think if it holds here, possibly you want to use the hour time frame now. If it holds in this hour and we get a close, but it's only 2:05 London time, which is 9:05 New York time. So this is the start of this hour candle. So where's it going to go? Again, if it was like 5 minutes to the close of this hour and it was sitting like this, then I'd be like, okay, let's see what the next candle does, and maybe we can bite back up with this little bullish stump of a candle where there's no volume. It's just consolidating at a key support, but it's not. So time is always an important factor. But yeah, it's interesting how we've dissected that pound yen. Hopefully you find little nuggets. You can get little nuggets of information for how we think and how we try and break things down. Cal, yeah, no problem, Cal. That's fine, mate. You're welcome. Anyone have any more questions? Or let me just check with Joe. Is there something you want to do with this? Ultimately, with pound yen.
Me?
Yeah, because a couple of you have been talking about pound yen. Is there anything you'd want to do with this, or what would you be looking at? What do you want it to do?
I would just be looking for some. I was asking about possibly somewhere around here, heading up to a higher high.
Yeah.
Maybe.
Yeah.
From this fib heading up possibly to the 127, like if you were to reverse it up above.
Yeah. I think you're onto a winner in terms of your thinking and the way that you hypothesize. So the way that you sort of say to yourself, I'm analysing this, right? I think overall higher trend, higher time frames are saying that this is bullish. We've just established that on the weekly. It's bullish. So these pullbacks are seen as just that, a pullback. It's a counter trend move. So if you can always consider that counter trend moves mean just that. So you're not taking the path of least resistance. You're going against the grain. So it's like pushing against a storm. And so what you expecting it to do? You expecting it to give you 100 pips? It might do that, but always understand and appreciate and value the possibility that because it's a counter trend, it might just give you a little pullback, a little correction, and you're thinking it's going to move 20, 30 more pips, and it doesn't. And so you always have to consider that the trend is your friend. They say that for a reason. It's your friend. So this is where patience comes in. You can try and short this down because it's in the mix and then be grateful for whatever you get out of it. Or you can say, I'm going to sit patiently, I'm going to wait, and if it comes down and tests the area that I'm thinking it's going to test, like down here that Joe's established, previous structure, supply-demand zone, all the blocks, whatever you want to call this box, it's a box, just to highlight where previous structure is, where prices come down before. If it holds here, then yeah, we can start busting back up, of course, with the trend, which is the path of least resistance. It's the lazy approach, but that's what you want, right? You want to make trading easy for yourself, as easy as. So yeah, just a little pullback, and it's just going to go back up to test 144 ultimately, or it might just mess around, But yeah, that's it. That's how you look at it. Great, brilliant. Now, if it breaks this area, if it breaks 143.50s, if it breaks this support, then you've got a whole lot of room to the downside. I'd be interested then because it's taking out the support. Then I'm interested. Then forget your 143.40 area. Well, yeah, maybe that is a T1, previous structure, previous low of this current support. But I'd be looking then for a proper drop, 142.80, which we just spoke about. Getting all the way down here, nice little spike down, just to take out all the stops that are in place that are going long at the moment. Nice liquidity grab to the downside. So yeah, you know, watch and wait and see. So make sure that you have a clear idea of what you're doing. So you've set your trade plan up. You say, right, I'm going to do this. I think it's going to go to here. Put your trade on and see how it plays out. As long as you've got your reasons, say, okay, well, I think it's going to do that. It's fine. At the end of the day, when all is said and done, we can use big words. Say it's full probability. Basically, you're guessing. You're taking a guess. And it's like someone saying to you, give me your best guess. And so then you've got some tools here that you can go away, pull up a chart, do some analysis, put some lines on it, do some squiggly drawings, you know, and then come back and say, this is my best guess. This is what I think it's likely to do. It cracks me up when people do this. They look, wow, they like really impress me when they're like this. They start going like this and they get their arrows. And they go, right, this is what it's going to do. It's going to go like this, and then it's going to go over there somewhere. It's going to go grab a cup of tea from over here, and then it's going to go down here, and it's going to go up there again. Once it's finished down there, it's going to go see his mates over here. Oh no, he can't because he's in lockdown. So okay, we're going to go that way, and that's their chart. And it's like, yeah, exactly. And it's like, you know, it's like that, and it's like, oh, great, you know. Cool. They're putting their sentiment out there. And that's what you have to do, right? That is what you have to do. Put your best foot forward, take a guess, have a stab, have a go, don't be scared, enjoy it. The more goes you have, the more stabs, the more attempts that you take, the better you're going to get at this, because it's a skill, right? So you're going to get better at it. That's what you're trying to do, right? You're trying to improve your way of thinking and how you do it, and yeah, and so it's a process. And so people say, how long before I become a millionaire? Well, you know, how long's a piece of string? So it depends the work. Yeah, a couple of hours for Tyson.
If you're all in on XRP, couple of hours.
Yeah, a couple of hours to then give the deeds to your parents' house, to the markets, of course. For them to kick you out of your bedroom, and it's like that, yeah. The amount of XRP traders that are suddenly, they're all professionals and they're all like broke, living in their mum and dad's basement.
Yesterday,
And they,
like,
did you? Yeah.
like after the SEC filed their charges and it dropped to like what 7 cents or something. I bought some and I just sold it yesterday. Like I didn't mind the pump was pumping it.
Yeah, of course. And lots of people are going to be doing that. Is it going to be life-changing for some people? Some people, yeah, that are traders and they're looking to make 100 grand, then of course, yeah. I mean, we know some of the guys that have been trading the crypto, XRP, Dodge, and made some money on it, 60 grand, 100 grand, 200 grand. Got money invested in crypto and they're just holding. They've got a nice little pot that they're just holding like a couple 100 grand in, and things like that. Great, brilliant. But they're just getting on with it. And it's different from watching these Wall Street bets, getting all the media attention. That's not good. That's not good for anyone involved in this business at all. And you know why it's not good, because it's drawing too much attention. People don't want you to be successful. If you draw attention to you being successful, people don't like it. It's just human nature, human behaviour. We think we're so civilized. We're not. We're still human. We're still prone to envy and all the emotions. It's just human nature. You got to, just got to accept that. It doesn't make you a bad person because you're jealous of somebody else having something. You might feel a bit rotten inside. You might think, oh, I shouldn't feel like that. It just is what it is. It's just us being human. We are like primitive creatures still sometimes. So you know, that's it. You got to understand these things. You got to always look at the world in a bigger kind of perspective, and then it puts perspective on what you're doing here, and it gives it some proper meaning and understanding that this doesn't mean the whole world. This just means it's a game that we're playing. Just want to have a little bit of fun with it. If you put that kind of a spin on this, trading is a bit of fun. You're a risk manager. Your job, it's like a video game. Your job is you're a risk manager. I'm going to give you $100,000. FTMO, they're going to give you 100 grand. What are you going to do with it? For me, I'm going to risk 0.25%.
Lambo.
Yeah, exactly. Buy a Lambo on lease, and then I've got to put myself under some needless pressure to pay 2,000, 3,000 a month to pay for the rent of this car. Not to mention, you know, $100 every time I want to fill it up, and yeah, it just, you know, and great. If that's what you want to do, there's nothing wrong with that. Nothing wrong with that at all. Some people will frown upon it. Yeah, let them get on with it. When you drive past them with your sunglasses and revving the car up to a point where it blows the engine or something, just whatever. It's all good. But this is a game, and just be a risk manager and say I'm going to risk 0.25%. I'm going to make a couple of grand a month. And I've got my 100 grand. You think, oh, I should make the 100 grand work more. Well, put it in a bank then if you think it's going to work more. They might give you 5% or something in a year if you're lucky. Otherwise, you know, if you're making 3, 4, 5% a month on a lump sum of money, that's it. That's your expectations. That's what you can hope to do longevity wise. If you did that successfully for 12 months, do you know what that gives you? Not only does it give you self-belief, confidence, and understand that you've now mastered this skill of trading, not only have you allowed yourself the time, you've been patient with yourself, and you've allowed yourself to show consistency. You might have only made 1 or 2 grand a month, as opposed to trying to force the money and trying to extract it like squeezing juice from a fucking lemon. You know, that's not how you trade. That's why people don't pass these challenges, because they don't know how to manage their risk. They're trying to hammer it. They want to get rich now, and they want to pass these challenges now. And then it doesn't help when you see some idiot on YouTube say, look at me, I passed in 3 days. I'm like, well, that's not, you know, what did they do? How did they do it? They, you know, is that long, you know, is that sustainable?
About that, Alex?
Yeah.
So I've been doing my challenge, right? Before I found this group, I was like, I passed it with luck. No, wait, I didn't pass it because I had like 10 over the daily loss limit. So I tried it again, went to 7% drawdown, and then after talking to Alex and stuff, I started using 0.5% risk, so half a percentage, and now I'm up 2% on the account just by being patient.
Yeah. Well, if you can do that, and you can do that successfully for 12 months, you can walk into a prop firm, you can go anywhere, do it like old school. Before all these prop firms popped up, you can go and approach professional firms and say, look, I have 12 months worth of data. Now, for 8 of those months, I made money. For 4 of those months, I had losses. But overall, over a 12-month period, I made 25% or whatever you made. You know, would you be able to give me a job, or would it be something of interest? And they might turn around and say to you, yeah, you know, you know what you're doing. You're a trader. You're a good risk manager. You understand the game. You know, maybe you want to come and work for us on a consultancy basis and give you 100 grand to start with, or 50k or something, you know, and go and work for a company. So it opens doors. Thinking of bigger picture, this is what I'm saying, 5-year plan. Or you can just sit in your bedroom on your phone or on a laptop and try and make £1 million. There's nothing wrong with that either. But you know, to always consider, it's hard to consider things when you don't really understand the business. So again, this is what we talk about: 8% development, 20% trading. Work on it. Keep going on YouTube. You know, Google the business. Understand what it is you're doing. Understand what I mean by risk manager. Understand the title. And someone's asked me about this CHOP indicator. So this is similar to an RSI kind of thing. You've got the zone where between sort of these are fib levels though. 38.2 to the bottom, 61.8 to the top. So when this is trading within this CHOP zone, it means that there's volume and you can trade. When it goes out of the zone, there's no trading. When it drops below here or above, there's no trading. It's just something that I'm playing around with. I don't give it too much importance, and I've yet to properly back test it. But that's how we would read it. That when it's in this box, this beige area, we can trade. The same with this. This is an RSI. This is the RSI. Sorry, this is what I should say. And so above the line is bullish, below is bearish. Yeah, just some simple indicators. Do I use EMAs? Yes. There you go. EMAs. I've got an 8, 21, 50, 200. 8, 21, 50, 200. YouTube videos. Go on my YouTube channel. There's I give you a breakdown of the indicators. There's a video on which indicators I use and why, and then there's the strategies showing the indicators I use and why. And yeah, it's all out there now. I've put everything that I need to on my YouTube channel. So yeah, have a look. Just keep looking at the bigger picture. Understand the industry. It will help you. You don't need to be a master of it. You don't need to have a degree, and you don't need to understand all the fundamental information. Just need to, get a grasp on, or have a grasp on what this business is all about. For me, this trade is not doing anything at the moment. But it's 2:20 London time, so we have 10 minutes before the US opens. So US stock markets might do something. The one I wanted to show you was the EU. I did analysis on it. Did anyone watch the YouTube video on EU?
Yeah, I watched it and I marked it up as well.
Let's have a look
Broke
then.
out of the trend line.
It did, didn't it? Yeah.
To the
Yeah.
downside.
Yeah. So we were interested in this. We were interested in this because it was sat there. We had a double bottom, the retest, and that's how it finished the week. And so I marked up some trend lines, simple trend lines, and I said, well, what if it breaks here? We've got a nice move to 122.80 long, looking for dollar weakness. So look at your dollar indicator, dollar index. Look for dollar pairs, including the pound, dollar, Aussie dollar, and then dollar CAD, dollar yen, etc. Look for the correlation. But it stabbed down, it's broke, and had another go to the downside. But I mean, it hasn't taken anything out, and it hasn't taken out this previous low either. So it hasn't made a lower low as yet. So we're just waiting to see for the next move. This is a daily candle, so this is what's happened so far today. We're halfway through the day because we still have the whole of the US session to kind of play out. Drill down further, 4-hour chart, interesting. Coming out of that zone. Broke trend line. Again, just using that trend line, little trend line, just to mark up on the chart to give us some idea, just to help monitor the price action. So yeah, you could have on the break, you could have tried to get in here. Again, you can't really see it on a daily or 4 hours. You'd have to drill down a bit lower. So I do use the smaller time frames. Oh, any more questions, guys? Any more questions? Sorry if I'm not answering them quickly. Any questions on YouTube? So yeah, euro dollar, I'm waiting to see. This is the third time testing the low. We haven't taken out any of the lows though. We're just coming down and keep testing this area. Again, it might just be a liquidity play, range bound price action. So we're still consolidating.
Hi Alex, how are you doing, brother? Today?
Oh, hello, mate. Jay, hello. Yeah.
I really appreciate you taking all the effort. You might already have told me, but I have a quick question.
Mhm.
I have been following 764 strategy for a bit, and I don't know. This might have come up to you many times, but the thing is, like, let's say if the price is at 764 and or it's approaching 764 or any other fib levels, right?
Yeah.
So there are possibilities or chances that it might, like bounce off instead of going to the next fib level. So
Yes.
how or what should I be looking to make sure that I don't jump in the trade and it's going to 764 or it's at 50 and it will definitely go to 764 or bounce off. So is there anything I should keep in mind before jumping onto trade and then to my surprise that it went on the other side instead of going to a key level, right? That might happen. So I really I really am confused. Like how should I be dealing with this?
I think it's a valid question. It's what people will always ask, and it's basically part of trading. I was just saying to everybody before that trading is about making a guess, an informative guess. That's what it is, isn't it? Probability. So we're saying, well, I would like it to do. What you should be is more demanding of yourself and say, or more demanding of the markets, and say, I want it to do this, and so I'm going to wait to see if it's going to do that, and wait for the market to come to you, and then jump in the trade. If it doesn't do what you want it to do, then don't take the trade. Don't just jump into a trade and hope for the best. I mean, we do jump into a trade and hope for the best already, but that's it really. There's no magic pill. What I have with these fib levels is that I know that more often than not, when it hits a certain area, it's going to react. So if I'm buying up to that 76.4, I'm going to hold my position or hold something and go long for it. If I'm looking to sell off that 764, then I'm going to wait for it to hit that and I'm going to short it off there. It's as simple as that. That's it. That's as simple as I can do it in terms of trading without overcomplicating it.
Right. So
Sometimes
let's
it's
say
better
that
not to
you
jump.
want to-
Yeah, go on.
Right. Sorry. Yeah. So let's say that the price is at 764 and we are looking to short. Then is there any clues or any hints that you
Well,
would
no.
be
Why would you be?
looking for before?
What? Yeah. So let's look at this euro dollar. Can you see this euro dollar chart? So this is the euro
Yeah,
dollar.
I can see that.
Is the current range. I said I put analysis out there the other day. I did a YouTube video and I said where to next. We highlighted that we're consolidating sideways in this range. If it breaks this and starts going up, I'd start looking for the 76.4. So if it starts making an impulsive move, we can appreciate that we've tested this low once, twice, I guess, 3 times, but definitely twice here is a double bottom. Very clean, wick down, rejected. We've just come down to some people call this imbalance. Come down and retest this wick just to fill it, and it's rejecting at the minute. If this is the low and it doesn't go any lower and it starts climbing back up, then it's quite possible that the lows will be in, and we'll start looking for longs, and we'll start looking for the longs to the 76.4. And in terms of stop and entry, well, we're going to use the smaller time frames to try and find an entry, but looking at the bigger picture always. So is this a 4-hour chart? In terms of, I don't know what else you want me to do with it. If it starts going up and we think it's bullish, we'll buy it. We'll buy it and we'll say we want to take it to here. And then we'll put our stops below here. So it would look something like this. If we've got the correct risk, so maybe half a percent, which is the problem with most traders. They have no idea of risk and they risk too much. And then, of course, they're trying to risk. They've got $100 in an account, or $10, or $5, or $50, or $20, and it's just the small amounts of money which are best kept in your pocket for safekeeping, because you're just going to lose it. What do you expect to do with it? I don't really understand it.
Right.
But then I'm not being.
Yeah. So
It is what it is. So look, something like this. This is what I would do. What's the problem with the look of this chart then? What would concern you about this?
My concern is that the price has not reached to 764. So something that would make me nervous is, like, let's say that if looking at this chart right now, if I decide to go long and then the price hits 764 and instead of going up, it goes down, right? So in that case, I'll lose up. So should I wait for the price to close above that red downward trend line that you have drawn on the chart, and when the price closes above that, then only should I enter? Does that make sense?
Yeah,
Or
so that's right. Yeah, break of the trend line as an entry. So it's all very well we established this, don't we? So we established that this could be a possible play on the euro dollar. Let's scrunch this up. Let's do that. Let's pull this stop loss up because it's way too low. Let's do something like this. Let's drag it across a little bit as well. There we go. And let's widen it up again. So yeah, you're looking for a place to enter the trade. So you mark it up and you say, okay, I would like this. If it does what we hope it does and starts to ride back up from here and goes long, then we'll want to wait for it to break all of this support, all of this resistance, go back up and retest this, maybe go back up where it broke out from, which is roughly this trend line here. Let's zoom in and have another little look. This 4 hour time frame. Okay, we'll leave it on a 4 hour. So it could do something like that, couldn't it? And you're saying your concern is where to enter, and yeah, if it goes back up and clears all of this, sure. Entering this trade is very subjective. There's no written rule on it. I mean, if you're a more aggressive and more
Right.
confident
Yeah.
trader, so if you're aggressive or you're confident that this is going to go long because you're looking at the high time frames, you could take the trade now. You could jump in right now at around 120.84 because we know it likes the 80 number. We can put a stop loss just below 120.60, for example, which would then, be at the lows. And we'll say, okay, it's done the downside and we think it's going to go all the way back up now. And then we're going to target this, and the risk to reward is phenomenal as well, and that's it. Or you can be a little bit more of a safer trader, I guess. Someone who's a little bit more conservative, doesn't want to take that sort of risk, or feels that this is risk, but it probably isn't risk. It's probably you're taking risk either way. If you've got your correct risk on the table, 0.5% or so, have a go. If you want to wait for here, then have a go here. There's no, I can't tell you the exact entry. I can make suggestions and say I'd buy it here, go long here, or go long here, or go long here. The best thing you can do. Sorry, one last thing. The best thing you can do, Jay, is when you have a chart like this, or you have something that you're looking at and you want to look at it further and you're not sure where to enter, send me the charts and ask me, and we can have a look at it together like this. And so by doing that over and over, that might help you to get used to what you're looking at. I just want to read this one question quickly. If you have an open position where direction seems to be going your way, would you open another trade and scalp it as well? You can do. Some people scale in, and so they end up with 2 or 3 open positions because the market's trending and they're building a nice position. So they do that perhaps, or they could scalp until it arrives at the level that they're hoping it arrives at. So you think you have a target, but whilst you're waiting for it to get to target, you've got a trade on and it's in profit. I'm going to take a few more trades when there's a good entry on a pullback or something. I'm going to get in and I want to take a little bit more off there. So yeah, you could trade that position until such time that it arrives. I do that often. I think, right, it's going to get to there, it's going to get to this level, but before it gets to that level, it's just pulled back and it's gone back against me, or it's gone back up. So I'm going to jump on and take another position, but I'm not going to hold that one. I'm going to bank that one when it gives me profit, and I'm going to keep doing that until we get to the target. So yeah, you can do, Chris. That's entirely up to you. It's not a wrong way to think or trade. It's good. It's maybe aggressive, but it's obviously your confidence. I'm fine. Do you consider what? Is that what you want me to ask? Do you consider what? It's like a knock joke, is it? So what was you going to say, Tyson? Were you going to ask me something?
Yeah, I was just wondering how these fibs are drawn. Could you like zoom out? Because I'm looking at Euro USD as well, and it looks different for me. So I think I have another high.
Okay.
Never mind. I have the same. No, I was just zoomed in more.
Yeah. So I was just there. We go.
Yeah, I was like, what?
Yeah, Chris. That's not a bad way to trade, by the way. If you're confident in that target, or you can use the profit that you're in profit on a position, and maybe offset some of that to play with. This is what I was saying about passing these prop firm challenges. When you're just plodding along and you're playing it safe and you're being a careful trader, you're a proper risk manager. You risk 0.5%. Keep going. But you get to the last week of your challenge and you've only made 6%. And I say only, if you make 6% on a 100k account on any given month, personally, that's very, very good. That's 6,000, $6,000. Anyone would be happy with that, right? 6%. But of course, to pass the first stages of this challenge, you need to get 10. So you could use that 6%. That's what I would say. Use the 6%. So this is where you can be more aggressive. But what you're doing is you've got 6% to play with. So I'm going to say I'm going to risk maybe 5% of that, 5.5% of that, 5.9% of it. I'm going to keep a little bit back. So worst case, I break even on the account and I get another go. And what's wrong with having another go? So you didn't pass it the first time, but they give you a second go. They give you a free go. And have another go, which gives you another month to keep practicing the way that you trade. And so you're learning and you're trading with real money, with real potential. And so you're going through all the emotions and you're having another second month doing this. And even if you don't pass that one, third month. And so you're building up your confidence. By about the third month, maybe you pass it. But then you're ready because you've allowed yourself time. You haven't rushed it. So this is what I keep saying to people. What's the rush? Are you in any rush? Have you got somewhere else to be? People rush. They overtrade and they don't think about it. They don't realise they're overtrading. They've got 4 or 5 trades running. It's like, well, you're overtrading. Why have you got 4 or 5 trades running? Why? What are you doing? Are you back testing something or are you just trading? No, I'm just trading. So why have you got 4 trades on? Where's the sense in that? What are you, a portfolio manager? You're spreading your risk quite fast, aren't you? I mean, you can do if they're small. I tell you, when I get funded with 100k, or if I was to get funded with 100k, I'd be risking 0.25% on a trade, so I could have like 2 or 3 positions open. If I had 3 positions open, 0.25% risk on each one, I'm risking less than 1% across 3 different positions, 3 different trades, and that's okay. Got things running, managing your risk, no problem. You can sleep well at night. Leave positions open. What's the worst that's going to happen? You're going to lose less than 1% across the board, or you're going to make some money, or you might lose 0.25% here and there. So again, it's all about that. That's where the problem lies, in how you manage your risk. So think of your job as being a risk manager, not a trader. You're a risk manager. Take that to heart. Ingrain it in your thinking. And understand the concept of less is more. It's the horse. It's the hare and the tortoise. The race about the hare and the tortoise. It's a marathon, not a sprint. You have to slow down and take your time. So, what do you think of trade in all times? London, New York, Tokyo. Well, I wouldn't. If I make my money in the London session, I won't trade New York. I don't trade the Asian session, even if when I was working over that side of the world, I wouldn't trade it. If I was in America working over that side of the world, or just living over there for a little while, or holidaying, I wouldn't trade the Asian session. Just don't really trade it. But I'd look. If I was awake, then of course I'm going to look at the charts, look on my phone, whatever. But I don't trade it generally. I look to trade the London session first and foremost. If I miss that, or nothing's to be had from the London, I'll wait for the New York. If I make money on the London, I don't trade anymore for the day, because there's no reason to be over trading. Once you make your money, part of being a risk manager, what was it you set out to do? What was your plan? Oh, I set out to make some money today. I made some money. Actually, I've made some good money. Right, good. And you're buzzing from that. And you think, oh, right, let's go make some more. And then you end up giving it all back. And you know that can happen. So, yeah. It's the same sort of question that people ask when it talks about... Yes.
Hey, I have one more question on 764 strategy. I think somewhere I saw on your website the entry that
We've got less than a minute. It's going to cut off. You need to log in again to the Zoom call. So log in one more time, or you can go on the live session on YouTube. I'm live on YouTube. You can go on there. That doesn't cut off. But this is a Zoom call, and it's going to cut off in about 30 seconds. So I'll log in one more time.
Right.
But yeah, you've got 2 ways of logging in.
I'll log in.
If
I'll log
you've
in
made
one.
some loss in London, will you trade in New York? Yes. No, it's good. Ask the questions. Turkey. Ask. It's good. Yes, I would trade to see if I can make that money back. Why not? Yeah, unless I'm feeling emotional and I'm going to cry and I'm revenge trading. Otherwise, yeah, of course. I'm not, I'm a grown up. It's all good. But yes, yeah, why not? Again, as long as you're managing your risk, you lose what you lost in the London session. It depends how much you lost. If you lost 5%, you shouldn't be trading. If you lost 0.5% according to your plan, fine. Wait for the New York and make that money back, maybe, or see if there's an opportunity. Control it. Control yourself. Control your emotions. Get grip. Don't allow yourself to fall apart. Let's log in again. Let's stop this and log in again one more time. Sorry about this. When I log into Zoom again, but I am live on YouTube. Alright, good. Let's get this off. That's annoying. We had a Zoom. We did have it set up so it was on. It was all paid for and done. So I don't know what's going on with that. And I thought that I thought that Chris was going to be here today. He says he doesn't trade Monday and Friday, but I thought he was going to be here Monday and Friday for the live sessions. Anyway, seems like he spreads himself thinly and then stays up all hours and tired. Let's get that back on. There we go. So one more go at this.
Hi, Alex.
Hey, yeah. So yeah, ask me the question. What was it you wanted to ask?
Yeah, so in the 764 strategy, I think I saw the entry that you might have mentioned in that strategy was like if the price crosses above 38.2 fib level, and if it closes above 50 EMA, then probably that would be a good point to be considered as an entry. But I'm wondering, does that apply to a lower time frame, or which time frame I should be looking? Like, should I be looking at 1 hour chart or 15 minutes chart or 5 minutes chart
Yeah.
for that rule?
Which one shall we use? Shall we
Because
look at the euro dollar? Is that what we can talk about, the euro dollar maybe as an
yeah, anything is
example?
fine. I would. Can you please look at CAD CHF, because I'm following the currency strength, and it looks to me, or it appears to me, that CHF is at low strength.
Sorry, CAD Swiss.
Swiss
CAD Swiss.
CAD Swiss, yeah, yeah.
Right, I don't have it on my watch list because it's not something I usually trade because it's just a dead pair to trade usually. But I
That
know.
could be.
Yeah, so let's have a look. It's like watching paint dry. It can jump through hoops. It probably won't do anything. Let's have a look. Has it moved at all since last year?
Yeah,
If I get taken out of
I
a
entered the
trade for
trade
break
yesterday
even,
based on
even
that
though I think it was
strength, and
correct.
I was in profit. So
Okay, so let this load up, and while it's loading, we'll have a look. So Chris is saying, you like to keep your losses limited, often move stop loss to break even as soon as I gain 20 or 30 pips. Okay, if that's a one-to-one risk to reward, then that's good, right? Take some profit off, partial profit, and move your stop loss. And then just hold something for T2. But often get taken out of a trade at break even though my thinking was correct. Yeah, so yeah. What's that's something that you got to kind of just work with, trial and error. You got to, depends what you're trading. It depends what time of day it is. It depends how much it's already moved. There's factors that you have to consider on the day or that trade. So it might move 20 or 30 pips in your favour, but if it's gold, it might move 20 or 30 pips in less than a minute. Or if it's CAD Swiss, it might move 20, 30 pips in a day. So it just depends. Depends what you're looking at. Why hasn't this come up? CAD Swiss. Computer says no. Doesn't like CAD Swiss. So yeah, I mean, you kind of have to factor those little bits and pieces in, don't you? That's part of your trading and your part of your risk management. And I'm sure it comes back, taps you out at break even, and then it moves again in your direction. You think, if only I could have held for another half an hour or so. And sometimes that will happen. So what is it you want to do with this CAD Swiss?
I wanted to know, like, which time frame I could use for entry point, like 15 minutes, 5 minutes, or 1 hour. Sure. Which time frame chart should be referring for 764 entry?
Maybe a 1 minute chart, a tick by tick chart, because you might actually see some movement on it. I mean, of all the pairs,
Yeah.
it's a dead pair. Look at it. Look, this is a daily chart. So these fibs, I don't know when I put these fibs on. In 1985, I put these fibs on. They're still there. Price hasn't really moved. Let's have a look. Let's have a look at the daily. But sometimes it's good to trade these. Joking aside, trade these smaller, less aggressive pairs. They're very much going to move based on if it's a Swiss related move or a CAD related move, and you'll get some movement from it. And so that's fine. Apart from that, they probably won't do a great deal until it is something that's happening, like some Canadian interest rate news or something that's going to provide some liquidity.
Right.
So 764, you can see here these charts are quite old and dated. Sorry, these fibs are quite dated. But when did I put that high on? That high was June last year, and it hasn't been taken out. And then July last year, June and July, I got my high and my low. Oh, where's this actual low? The proper low is going back to March. Yeah, so we had some movement. We had some movement when COVID was happening last March. Everything moved. Even this pair that doesn't really do much, it moved, which is great. So it moved quite well, didn't it? It's given us something like a 6,600. It retraced back up to 7,200. So that's 600 pips. So a nice 600 pip range. There you go. Not bad. 600 pip range. It's pulled back to the 76.4. Tapped it to almost perfection, pretty much. And then it's gone back up. Let's update these fibs then. So these fibs are old fibs. They're not the last fibs that I use generally. So let's go ahead and update this. Gives me an opportunity to look at something that isn't on my watch list and update it. So yeah, I mean what time frame is this? This is a daily. What I'll do, actually, I'll leave it like that because you can see that there's a 764 and a daily. So 764 on a daily, it eventually got there, rejected off the 76.4, perfectly rejected. So yeah, very, very powerful, very relevant, fine. What's the Dow Jones doing? Dow Jones American market looks like it's going to try and sell off. Are we going to have a bit of a sell-off, bit of a drop? Maybe to 30,000 again or something. Who knows? Or we're just going to pull back. Okay, so that's pretty good. Let's get rid of that. Let's drill down. You'd have to look at smaller time frames because there's nothing else happening. What we want to do here is we want to look at this bit of price action, this range here. So we picked the closest high-low range, which in this instance is that to there to there. So 6,900 somewhere around there to 7,060, which is it's about 160, 150 pips or so, 150 pip range that it's currently bouncing around in. Let's have a look on so let's put it on a 1 hour. A 1 hour would be alright because I'd say if it was over 100 pips in range, then that's good. You can use a 1 hour or 30 minute or 15 minute. That's okay. And
Okay.
so yeah, that's okay actually. It's not bad at all. Let me just put this on here like that. There we go. And let's put some fibs on. So we'll see what it looks like. Where are my fibs? Right, what's that? Just getting my fib tool. Bear with me. Configure this area. Let's get that on there. Where is it? Where's my fibs on this? Okay, go there. Shapes, others, shapes, pictures, orders, etc. My settings for that. Others. Yeah, there it is. So fib retracement. See, why is that not on there? That's really bad. That should have been on there. Fib extension, and then that there. Good, done. Get rid of that then. Very surprised that that's not saved. New software. They've tweaked it, updated it supposedly, and they've left a few bugs on it and a few things like my 4 hour chart now. My 4 hour time frame for the Dow Jones is not at 8 o'clock, 12 o'clock, 4 o'clock. It's at 9 o'clock, 1 o'clock, 5 o'clock, 9 o'clock. I'm like, what time zone's that? Doesn't time with anything. It's supposed to be London time zone for me, but even if I change it to the US time zone, it's still out of sync by 1 hour. And it's not just a simple case of adjusting the time zone for that single instrument, because it doesn't do it. It does it for all of them. So by putting the Dow Jones into, correcting the time zones so that I can view it correctly on a 4-hour time frame, it will put every other instrument, everything else that I've got on my watch list, it will put that all out of sync by 1 hour. Madness. And that's been the same now for about 2 months, almost, or 2 months, about 6 weeks, and they haven't even bothered to keep me updated. It's just pathetic, and I can understand that we are in a lockdown, etc., but to not even respond, or I don't know, it's very strange. But that's just the way things are at the minute. Very strange times. Does that help? Where's Jay? Jay, does that help? CAD Swiss.
Yeah. Thanks, Alex.
61.8 at 7,000. Round number 618. You know it's going to bounce off there. Or you can have a feeling that psychological round number, institutional level, whatever you want to call it. There's so many titles and labels now. Often I think people just throw these names out there to make themselves sound like they know what they're talking about. It's quite funny, but yeah, look, there you go. So 618, 7,000, round number, quite nice. And it's moved about 10 pips off that. And this is a 1 hour chart, so we've got 1, 2, 3, reversed, 4, 5, 6 hours. We're 6 hours, and it's in like a 10 pip range. So there's nothing wrong with that. If you want to put like a stop loss of 10 pips just above and short it off here, providing that you get a bit of a sell-off, then you could drill down again and look at this range, this push up, which is about that's about 100 pips or so, 100 pip move up. Or you can expect to see it just consolidate off this the 50. It broke the 50 and it went to the 61.8. Previous structure at 50, rallied to 618. Hardly a rally, it was like 20 pip move. Woohoo! 20 pips, that was it, it's done. Now next move, up again, 7,020. So potentially you could look at 20 to 30 pip move further to the upside. Okay, so that's my take on CAD Swiss. Another potential move to the upside could result in that 76.4 targeted for another 20 to 30 pips. So what's your concern with this? What would you want to do with it? You could wait for it to get to 7020 and then short it off there.
Yeah, so I was thinking that what time frame I should be referring to.
It's not so much the time. Yeah, not so much the time frame. Not so much the time frame. More about the range. People keep mixing it up and thinking they've got to look at a certain time frame, but it's about the range. So you can see the range. This range, now that I've put it on an hour time frame, you can see where it is. What I'm looking at. That's about 150 pip range. I just put it on a 1 hour time frame for illustrative purposes, which is best viewed on that, I guess. But you could put it on a 15 minute, 30 minute, a 4 hour. I saw it on the candles here, but it gives you an idea. So you think, oh yeah, there's the range. Let's have a look at it in more detail. So you need to drill down to a smaller time frame. That's it. That's what you do. You don't. It's not about time or going from that date to that date. Some people used to think that I have to go a week time frame meant look at it from last Monday to this Monday or Monday to Friday. People would get confused with that, and it's just, yeah. Okay, so the nice drop on the Dow. It's a proper drop. There you go. It's done 100 pips so far. It's going quite well. But yeah, there you go. Let's get rid of these fibs as well. Do you know what? I'm just gonna get rid of that. Get rid of them because they need updating. So I'll leave that like that, and let's move to another chart. Let's have a look at this. Anyone want to look at anything else? If you're done, then please mute your mic. Or if you want to ask a question, Chris, you've got your mic. It's not on mute. Do you want to ask anything? Or Need any help with anything? Chris B.
Oh, hey, yeah.
Hello.
No, I tell you, this is the first live session I've joined, and it's been gold. It's cleared up so much. The
Oh,
first one.
okay. Oh, brilliant. There we go.
You know, thanks for this.
Oh yeah, no worries, no worries at all. Any questions? Anyone else? Any questions? Anything else that we should look at? Let's have a look at this. Let's get rid of this now. Let's move on to pounds sliding. Pound yen looks like it's trying to go down. Let's take it to pound yen. Let's have a look while that's loaded up. Let's have a look at the. Let's have a look at euro dollar. Euro dollar's just still range bound. Show you a nice move. There you go. Look, that's a proper move. Let me show you a bit of fun. There we go. Perfect. There you go. US Open back down to 30,000 or thereabouts. Money made. Now what we would do here, we could use a 15-minute time frame, or maybe just an hour. I'm going to look at this range. Okay, let me do it for you. Mute your mic. Mute your mic. There we go. When you guys, so I don't have to hear photocopiers or printers. Done. Put some fibs on. We want to monitor this move, so this is how we use those fib levels. There we go, done. So that move's done. 38.2. Come down, test previous structure as well. Put a little zone here just to highlight, help those people that can't see this properly, that want to be able to look at things a bit more in terms of supply and demand zones. We're obsessed with these boxes. They help highlight price action. They're a confluence. They're not what you should trade off. They're not primary. They're secondary. They play second fiddle to other support and resistance. Like EMAs are better, and obviously fibs are better. So that you can see previous structure here, double bottom, and then we just drag it across. I'm not going to make it that wide. About there. There you go. So that was a nice move down, right? That's the move down. US Open. We're about almost 30 minutes into the US Open. Money was being made short in that move. It's gone up, gone up, gone up. Nice little bit of resistance. Tested it. Reversal candle. There you go. Money was made down to that 38.2 as the first target. People would be trying to hold for the 30,000. It might get down to 30,000, but for me, when I put the fibs on here and I think, okay, previous structure, 38.2 first bit of support, my money's made, I'm in, I'm out, maybe even move a stop to break even if I want to leave something on and hope that we get this next move. If you miss it, then you want to drill down to like a, I don't know, 5 minute, 15 minutes, and start looking at this price action. This is good to see price action. This is where the MT strategy comes into play. Now, people ask me about the MT strategy and they say, I don't really know how to use it. So MT strategy is going to be applied here along with the 764 strategy. 764 strategy is basically just telling you to short it down to the 76.4, which is at 29,797. So 29,800. So 29,800. We're sitting at 30,100 right now. 30,100. So if we break this current support, that would be your T1. If we break here, we're going to short it down for another 200 and something pips to 764. It'll get down there. If it breaks here, it will get down there. It increases the probability.
If you do that, Alex, like where would you put your stop then? Above the.
Well, wait for it to pull
above
back
the
on the. Wait for it to pull back on this 5 minute chart, and with momentum, the momentum strategy, you're waiting for the pullback to play out, and you're waiting for this rejection. So let's watch it and see, and then we can use the MT strategy, and we can say, right, we're going to short here and take it back down. It could just be a correction because we're trying to establish, was that the move just to correct? Now we're going to go up and start making new highs. So then you have to always keep in mind what's going on the 1 hour chart, on the daily chart. What's the bigger picture telling us? But it's still bearish. We've had a move up to previous structure to test all these wicks. Very wicky here, very choppy. So yeah, 5 minutes. 5 minutes. See what happens. Got a minute and 47 minute to go, 5 minute and a 15-minute candle. So we've got a bit of a rejection. Let's see what it does. See if we can get a nice short on and take it down. I'm not interested if it just works its way back up. I am interested if it can do something a bit more to the downside. Again, this is a weekly chart, so we've had that big move down, and it's you know, it is bearish off that move, but we could start working its way back up. But it's the first day of the week and the month, so it's open to everything and anything. Anything can happen. Can you guys keep your mics muted when you're not speaking? Thanks. Alright, good. So that's interesting. So previous structure there. So this is the bigger picture. Always look at a bigger picture. Doesn't really tell us much. It went down a bit, up a bit, down a bit. It's going up a bit. It's not telling me anything on the daily. It's telling me daily is bullish, but that's subject to change. So it could just be that this was a corrective move, but at least it was a good corrective move, and we got down to 38.2. So that was nice. Maybe they needed to do that. Bit of liquidity grabbing, bit of a stop hunt, bit of profit taking, whatever. So now we just sit tight. But that was the move. That, when I say that was the move, that was where the money was made for that move. So we'll see what happens next. If you want to look at anything else whilst we're waiting, we can come back to that. Gold's a good one. You haven't looked at gold. Gold, I've put a trend line on there, even though we spiked above it but rejected. And then we had the 764 or 1810. We stabbed down to them, we rejected. So we can get rid of this now. Don't need them. Just clear up the chart a little bit. Note I've still got some fibs for the higher, bigger move. Oh, that's good, isn't it? Look at that. Look at it gap down though. See, that's gap down. That's going to go back up to 3100. Very volatile. 40 pips. Let's show you that. Show it on like a 1 minute chart. There you go, stab down, but then it's going to go back up. I told you it's just going to do that because it stabbed down really quickly and it gapped down. There's that N shape. It's very busy, very volatile. I like this sort of price action though. Personally, I like it when it's moving, but that's because I know what I'm looking for. You want to look at pound dollar. Okay, let's look at pound dollar. Let's put this back on a 5 minute. Yeah, so it's quite bearish still. It's holding. Next target. So I was hoping for a bit more clarity. So I've got to wait. If it breaks 130, if it breaks 30,000, we can take it down for a good 200 pips or so. Anyways, there's plenty of scope here to make some money. And all of this price action, as seen on like a 5 minute or 15 minute, is just price action that we can use to put our stop just above it as a sort of an area of saying, well, it's a buffer. I'm not going to jump on this though yet, because if it was just making a corrective move, it's done what it needed to do. So it needs to prove what it wants to do next. It needs to tell us. And you notice pound yen is very much tagged to the US stock markets as well. They can react and move together quite a lot sometimes, especially when the US opens, during the US Open. Seems like...
Alex,
yeah.
oh, sorry.
Yeah.
Are USD CAD and AUD USD correlated in any way? It's like I've noticed the last week or so, like I've had the open position on both, and noticed they move a lot in the same direction. I mean the opposite. So USD CAD goes up, AUD USD goes down.
That might have something to do with the correlation with oil. The fact that dollar CAD is very much correlating with the price of oil, and then you have the Aussie dollar that correlates quite heavily with gold as well. And so there might be something there that's causing a bit of a correlation. I'm not sure. I haven't looked at it personally. I know that it's good to see different correlating pairs and things that are working together or against each other. And note as well that does change from time to time. So it can be what they call seasonal. So it might be now. It might be doing it now, and it might do it for another couple of weeks or months, and then it might change again. So yeah, it's always worth keeping an eye out. I couldn't give you an answer though. I don't know. I've not noticed it. I've not even looked at it.
But like, do you keep that in mind while managing risk as well? Because for example, GBP USD and EG Euro GBP, they're correlated. Do you like,
Yeah.
let's say you risk 1% per trade, you don't open 2 trades because you would be risking 2%.
Yeah, I wouldn't trade the euro dollar. I wouldn't trade the euro pound if I'm trading the pound dollar. I would use the euro pound though, just to confirm if the pound dollar's going down, euro pound's going up, and vice versa.
Okay.
So that's the confluence. That's for me. It's like, okay, that's an added bonus. If they're both moving up and down together, then that's worrying. I think no, that's not right. They're out of sync. I don't like that. Let's wait. Let's allow one of them to decide which one's going to move opposite, and resume what I'm used to seeing. Same with the euro dollar and the dollar Swiss. So if the dollar Swiss is going down, euro dollar should be going up, and vice versa. And if they move down and up together, that's not right. They should be moving opposite, like a mirror effect. So that's correlation.
Okay.
So you can Google correlation and see which pairs correlate well, and there's tables out there that give you percentages. So I think like dollar Swiss and euro dollar are the highest correlating pairs, and they might be something like 89%, 90% or something like that, very high. And then the next pairs I believe are probably the pound dollar and the euro pound, but don't quote me on that because I'm not 100%, I can't remember, but I know that they do that. So they're some highly correlated pairs, yeah. And then, like you say, you have things like your precious metals, like oil, commodities like oil and gold, things like that are correlating with things like Aussie dollar for gold, and the CAD-related pairs for oil. And so, yeah, understand that as well. It just gives you some bearing, because if something major is happening somewhere, it may affect your trade if you're in a trade that's linked or pegged to some degree. Yeah, so that again, that's you understanding the markets on a global scale and understanding that we are connected more than ever. Okay, so it's done a move this down. It's dead. That's it for the minute. It's done a move and that's consolidating. So that consolidation suggests that we could just quite easily go back up as quickly as we went down. So, but yeah, that was the move. And you see the way it went down, previous structure, went down. What did it tap? Very precise. Tapped the 38.2 and bounced off it. Very precise. That's how powerful these fibs are. There's so many traders out there now that I've looked at over the years that always quoted fib levels and always thought, yeah, okay, there's some guys out there that I've always traded with these fib numbers, and it drew me to look at them, and I looked at all the different various. If you stack up all your various levels, various support and resistance tools. So you've got things like, make a list. EMAs, you've got your trend lines, you've got your supply and demand zones, so order blocks. This purple thing here on my chart. You've got your fib levels. What else have you got? Pivot points. You've got your pivots. What's a pivot? Don't ask me. Just have a look if you're not sure. Pivot points. There's various. So then on a scale of 1 to 10, you've got to mark them. On a scale of 1 to 10, which ones are effective? Which ones does price react off really well? Which ones are powerful, accurate, precise, more than ever? So you got number 1 coming in at number 1, top of the chart, fibs. Number 2, I'd say EMAs, and then everything else follows, not in any particular order. Order block's too big. So it's not precise enough. We say, all right, it's gonna wick down to around about here. Okay, great. But depending on your time frame, depending on what you're trading, this zone could be 50 pips wide. I don't want to guess an entry in a 50 pip range. That's my money made in a 50 pip range. What I've got to look for an entry in a 50 pip range? That's rubbish. These order blocks. I can see people using order blocks and supply and demand zones, but they don't use them properly, or they do. They use them on a 5-minute and on a 15-minute chart. If you have a pound dollar chart that you're sending, don't send it to me. Send it to my Telegram. Send it to my personal Telegram if you don't want to send it to my Telegram group. Personal Telegram is at ALX underscore TYW. So at ALX, short for Alex, at TYW. There. Send everything to my Telegram. I always look at Telegram. It's easy to look at and respond to. It's on my phone. Yeah, so hopefully this has been of use to everyone. If no one else has any more questions, I'm going to finish up on, well, unless you want me to look at pound dollar, I'm going to finish up looking at the the euro dollar, sorry. Euro dollar's more of a, we've got about 10 minutes, so if you want to ask me any more questions about anything, 10 minutes to go. Let's have a look at this. Drill down on a 1 hour chart on a euro dollar. 1 hour chart, euro dollar. So this is you know where we've plotted this buy and sell. You can see it's just holding. It's a good place. It's a good area for potential long. If it holds, it's a potential entry. Good entry, great entry. It's come down. It's tested the previous low, and it's now holding. Let's scrunch this up. How big are these blocks? It's weird, isn't it? It's strange. Right, let's move that up a bit. Let's make it nice and small. It doesn't need to be dominating the whole screen. There you go. Yeah, so there we go. We are trying to break. The Dow's trying to break down. It looks like it's going to go. Is it going to go? Yeah, it looks like it's going to pop. So next downside target 29,800. So we're going to start looking for 29,800. 30,000, 29,800. It might actually just give us a 50% pullback. Definitely the next level on this needs to be a 50%. So that's there, 50%. It's drying, it's going, it's good. 30,000 is gravitating after a bit of thinking. Where are we with this? Oh, there we go. So let's have a look. Where are we going to get down to? 29,960 area. Let's see if we can get down there. Let's drill down to a small time frame. It's found some support. It's holding. No, it's just choppy. It's not doing anything. And let's look at euro dollar again. Yeah, let's move on anyway. Euro dollar. Have a look here. Euro dollar. Okay, yeah, good. So you sent me this chart on the pound dollar. So pound dollar, I think, find some support. So this is a what time frame is this? That's a 1 hour time frame. Does this look convincing setup? 38.2. It's very hard to tell. Where's your 0% on this? But yeah, I mean, it's holding its previous structure, isn't it? So that's the same as the pound yen. So you look at your pound yen as well. Look at the euro dollar as well. Look for something to correlate with something else in terms of, does it all move together in unison? Let's have a look. Anything else to look at? Yeah, I mean, it looks pretty decent. We can have a look at that. Let's have a look at it on here actually. Can you please explain euro dollar entry? Yeah, of course. Yeah. I'm not in the euro dollar. I was just showing for illustrative purposes. That's what we could be looking for. Because it's at support. If it breaks support, then it's going to go down. No, it's absolutely fine. It doesn't matter if you join late. It's good that you're here. Well, I'm on a weekly here. Okay, we've got some support here. Okay, that's not doing anything either. That's the same. It's just not something I would trade right now. This is all clutching at straws. You're looking for small intimate movements within a range bound bit of price action. This is pound dollar on a 4-hour time frame. That's not appealing to trade. It's sideways. It's range bound. Yeah, sure, it can go back up there. I'm sure it can, but just, you know, I like this kind of movement. Something that actually shows a move, so you can get on it and trade it. This is a 764 right there. You can see this, right? Look at this. This is nice. This was a good setup. Right here, right there, coming down off that trend line, up there, went up, pulled back a bit, didn't quite hit 38, then it had another stab up, liquidity grab, whatever. It's done that, 137 area, tested it, and then dropped. That's nice. I thought it might have touched the 7.6, didn't quite touch. See there, it didn't quite touch, not an exact science, didn't happen though, did it? Didn't quite make it. And then it's shot up and gone on its merry way. But here right now, this is just sideways. If we got this trend line, we have this trend line here, we have the previous high testing here. It's a wedge formation. It's going to start squeezing this price. There's no trade here for me. It doesn't. It's not. Yeah, nothing. Wait for it to do something. But then, you know, it could be a good place to get in off 137, and it could start going up and, you know, break 130, the highs 137.60 and keep going and go to 138 and 139 and 140, which is what we're ultimately looking for to the upside. Hopefully you found that of use and of value. Sometimes it's best not to trade. Sometimes it's just useful to observe. Observations is what we do. You're a risk manager. Sit. Observe. Observe the price action. Observations are key. And then if you think you like the look of something, you have to ask yourself, don't do anything with it. If you like the look of it, there's going to be certain setups. Every week, markets trend, they move, they do stuff 20% of the time. There's some good stuff going on 20% of the time. To put that in a context, once a week, once every 5 days, about 20% of the time, stuff happens. You know, every week stuff happens. It's eventful, it's good. It's like, oh, we can make some money today. If something's trending, it's like, okay, just go with the trend. Buy the dips, whatever, go with it. Great. Put all your money then, make your money. You can make 10% in that day. You know, if you traded that way, great. The rest of the time, just, you know, watch, see, observe, put some alerts on. Say to yourself, if it breaks this level, I'm going to go short. If it breaks this level, I'm going to go long. But until it does so, I'm not going to do anything, etc., etc. Learn to be a bit more patient. So you can do a lot of analysis. There'll be a lot of setups that you think look good. A lot you might miss, a lot that you won't take. That's okay, it's all good. That's the fun of this. Euro dollar. Let's have a look. Euro dollar. So I was saying, like the other day I did that. I don't know if you saw the YouTube video that I posted. Euro dollar, where to next? So this was when it was sat here and it broke this trend line. Just put a little trend line on it. It broke it, but it hadn't taken out the previous low. So it's not taken out the previous low. Let's drill up again to a 4 hour so we can see. That's the range. So I'm saying if it holds here, really, really cool. If it holds here, you can either enter long here with a stop just below all of this price action, or just wait. And if it starts to build up some traction and breaks back up above the green trend line and starts to test that resistance of that trend line there and starts to break up here, so around 121.50 area, starts breaking 121.50 to the upside, then 121.50 you could perhaps look to take it long to 122.80. So we're going sideways. You've had the sell-off, consolidation. If it holds here at support, it's long all the way back up. So a U-shape. So drop down, consolidated, curled back up. Isn't that what price action is about? And that's generally what it does. Alternatively, if it breaks this support, then you start looking for that low. You start looking for back down to 120, $1.20 round number. So yeah, you know, we were saying where to next. It's got some opportunities to do something. If you shorted it on the break today, you could have made like about 30-40 pips. Maybe with a equally small stop, you could have maybe made, if you were risking 0.5%, you could have made 0.5%. for example. Where's that curl? Where's the arch? Is it like an arch tool here where we can draw like a curved line? It's not there, is it? What about this? A curved line? No. Here? What's here? Anything here? Oh, there's the curve. There it is. Let's see if this is the one. Oh. Okay, we're good anyway. Done. All right. Have a good day, everybody. Thanks for today. Thanks for joining us. Hope you found it valuable. Have a good day. I will talk to you guys. Yeah, catch you guys all tomorrow. Something like that. If it does it. Something like that. But when we look on a high time frame, it could do this, Dilip, quickly before we sign out. You know, it's holding there, right? We're in a bullish trend. It's holding. It's hovering around the bigger picture. It's hovering around that 76.4, which is that red line that I've got here. You know, it's found that. Let's do away with all of this. Actually, let's just leave it on. It's fine. Get the picture. Hasn't finished its journey to the upside, you see. I just thought we need to go up and maybe have another go at that 125 area. See if it can do it. Anyway, there you go. So we'll just sit and wait patiently and see how it performs, see what it does. Might come down, stab everyone out, stop loss, previous structure, and then go up. Yeah, have a great day. Thanks everyone. Bye for now.